The United States hasn't produced a single pound of domestic tungsten in decades. Ali Haji is CEO of American Tungsten, and he wants to change that. The company's IMA Mine project in Idaho is a past-producing tungsten property with a significant historical output. The company says commercial production will commence in 2027. Ali, welcome to Mining Stock Daily.
My pleasure, Michael. Good to be here.
The IMA Mine produced tungsten roughly from 1945 to 1957. Your phase one strategy focuses on reprocessing existing tailings. Why did you take this approach?
It's a great question. We looked at the tailings and we put in 6 postal digger holes and found a grade of about 0.25 tungsten oxide. That tungsten trioxide is roughly 20% higher than the 0.2 global average that is in production for tungsten. And as a result, we opted to bring that online to de-risk the capital requirements to restart the IMA mine. We also have 0.5 ounce per ton silver in those tailings, which ultimately translates to a very profitable operation that will remediate the landmass and reclaim any sort of environmental challenges that the local community may have with respect to them.
What's the recoveries like for doing that? Is there any particular, hard processing in terms of getting those metals out of the tailings?
So the tailings are, if you picture bunker sand, very similar to those. You've got very fine grain. You've got a few black specks, and the black specks are the tungsten and silver. As a result of the let's call it the medium in which the tungsten exists, flotation, a bit of gravity will allow us to recover the vast majority of the tungsten and the silver, thereby leaving us with quartz sand. So recoveries thus far from lab testing are in excess of 80%. However, we know lab and bench scale testing is not indicative of what you might be able to find once you are in production, but it is sitting on a ROM pad. It is ready to be processed, and the mining cost to move that tailing impoundment, if you would like to call it that, into a mill to ultimately produce a concentrate is very, very low.
Do you expect that the phase one mining, that's going to be the tailings processing, that's going to fund your larger mining work?
That's correct. So if you look at the grade at 0.25 and the commercial terms that we're about to engage upon with our off-takers, the capex associated with reprocessing the tailings amounts to about $4 to $5 million US, with the capacity of putting anywhere between 40 and 60 million US in cash flow into the treasury.
You're targeting, let's turn to the rest of the operations. You're targeting an updated mineral resource estimate later this year with a PA to follow in 2027. Given the pace of drilling, 4 rigs running, 35,000 feet planned, is there a scenario where the PA gets pulled forward, and what's the critical path for controlling that timing?
So in terms of drilling, we've got 4 rigs turning today, 2 underground, 2 on surface, 35,000 feet planned, of which we've done 18,000 feet. And we're sitting on about, give or take, 6 weeks worth of core in backlog that's yet to be assayed. We're very confident with respect to our updated resource statement. The resource statement will come out in August, September, shortly thereafter, given the fact that we've been working internally to advance our internal PEA and PFS, and we're now in the midst of having our third party sign off across both of those aspects. The intent is that we have the PEA, PFS signed off before year end, with commissioning on the IMA mine to commence in 2027. The production profile envisioned there is around 500 tons per day being processed, equating to about 8% of US tungsten demand and 10% of US moly demand. And in excess of that, with the 2.5 ounce per ton silver that we have across our ore body, roughly 300,000 ounces of silver being produced from the IMA mine.
Talk about how is it like working in the mine right now as well? Have you been constrained at all, or has it been easy to access?
So it's private patented land. We have road access. It's paved all the way through to the mine entryway. We have power that feeds up to our property. We have about 220 acres of private land that houses a three-bedroom house, our core shack, some of our core cutting stations that we've since constructed. We also have private patented land for IMA, which is the actual claim that we own. And as a result, we own the surface and mineral rights. One of the key advantages that we have relative to our peers, which I believe you and I spoke about in our prior conversations, is the fact that we sit above the water table. So we're going into the mountain, not under the mountain. We have no dewatering, no discharge, and no water treatment to contend with.
So that was, yeah, in terms of operating with the underground mine, it is a quite old mine, but you've been able to, do the underground drilling in that, you've been able to run an underground drilling program in there.
Yes. So when we started back in May last year, we raised a bunch of capital. We raised $7 million in July. We then used that capital to rehab our D-level and zero-level adits, which are at 1,800 and 2,200 meters above sea level, respectively. We then put in close to 2,000 feet of drifts, which included a number of drill stations. Those are underground, our miners call them ballrooms because they're quite commendable in terms of the infrastructure you put on underground. And we've drilled those 18,000 feet. We've had nothing but dry land to contend with, given Idaho is a fairly arid jurisdiction, as well as the fact that we're above the water table. So the infrastructure has been rather sound. We've had no challenges. We currently have about 50 people working on site around the clock. And as far as the executive team is concerned, that's an additional 5. So 55 people on the team working around the clock to ensure that we are the first producer of tungsten in North America.
Your last drill program, you found some moly. You did mention it earlier. Is that are you getting any types of changes in terms of understanding what this development plan is going to be and what you're going to be mining?
Well, you have to look at the history of the asset. It was a tungsten producer up until 1957, 1959, was the 4th largest producer of tungsten up until that time, contracted by the US government as well as GE. It is a moly porphyry system that is hosting tungsten in hubnerite, which is different from wolframite or scheelite, which is generally understood to be the two host bodies of tungsten. The hubnerite gives us an advantage because it has 2.5 ounces per ton silver as well as 0.15% moly. The 0.15% moly is an important piece to raise here, given the fact that you have mines like Thompson Creek, roughly 40 miles away as the crow flies, restarting molybdenum production at a grade of 0.04. In terms of tungsten globally, the grade that is produced ex-China is at 0.2. We are at 0.67. And then in terms of silver, we have 2.5 ounces per ton in our ore body as well. So a very different ore body relative to our peers. And again, above the water table, which means we will use gravity to help us with our OPEX and ultimately bring this product down to the Patterson Creek and Patterson Valley, where we intend to put our production mill in place.
So, Ali, what are your targets? You've got 35,000 foot drilling. You've been through the metals that you've talked about in terms of what you're looking at in terms of grade that's going through. Is there anything that you look at in terms of the way that the geology is working, the drill results you're getting back that you're looking at that this is what you particularly look forward to actually targeting and defining?
Yeah, so in terms of the underground operations, historically, about 15 miles of underground workings exist, so we've got great ventilation. What I will say is that the production drift that we're looking to put in place will sit between the D-level and the zero-level adits that we have now rehabilitated. And that will allow us to put a production drift in place that's about 14 by 14 feet wide, process or mine 1,000 ton per day at the very sort of conservative estimate. I'm sure we can bring it up to 2,000 ton per day. But our goal with the production drift that we're putting in place, that will have a paperclip structure accessing all levels, will allow us to access the ore bodies or the resource segments and veins that we're keen to bring out using cut and fill drilling, very similar to Sandong, which is Almonty's mine in North Korea. We will bring material down. Tungsten remains our focus today. However, I think the moly deposit that resides beneath the tungsten silver veins is highly encouraging, and the production drift that we're putting in place will allow us to have access to not only the tungsten silver veins that sit above the water table, but we would have the ability to put a junction in place to ultimately access the molybdenum as we continue development on the mine.
You closed a 40 million baht deal in March at 280, and then there was a signed LOI with Exim Bank for 25.5 with debt financing. I believe roughly 49 million in cash. How far does that take you, Ali?
So in terms of Exim, that's 25.5 US, and the reason that number is quite relevant is the price of the mill that we're looking to put in place for the 500 ton per day processing capacity is give or take 25.5 as quoted in September last year. Once inflation comes into play, I suspect that when we're ready to construct the mill, that'll be closer to 30. The 49 million Canadian that we have in the bank ensures that we're able to complete our exploration program, show a life of mine that is not only sustainable, but might be industry beating in terms of restarting underground operations anywhere in the world. At the end of this year, and once we have our first revenue being produced from our tailings, we will still have 12 million in the bank without having drawn down upon our Exim debt facility. So from a treasury perspective, I'd be hard pressed to find a junior that is fully funded to production.
Now, in your slide, you note a significant value gap, noting some peers like Fireweed and Guardian above you. You are going into production soon, as you note, Ali. Why is the gap, and what are you doing to address it?
Well, in our view, I think the gap has a lot to do with our resource. The resource that was defined in June of last year was about 300,000 ton based on historical drilling. We've since expanded upon that. We've also not put out a PEA or PFS to the market that shows the economics relative to what we're looking to put into production. And those are the key re-rating catalysts in our view. And then last but not least, an imperative one that was discovered by us, given the historical assay results on the tailings were not great, but mediocre at best. And having completed those 6 postal hole assays, as well as now a 30-hole auger drill program, this is a path for us to show the economics around the project. And looking at the capital that we expect to generate from our tailings alone, we will be de-risking significantly the capital requirement necessary for our $25 or $30 million mill, as well as our $35 to $40 million production drift. So in terms of dilution, I think the market's simply waiting on a resource and credibility around a PFS that shows profitability. And the key drivers here, of course, are, Michael, the 0.67% tungsten, roughly 3x higher than the global average in production, the 0.15% moly, and the 2.5 ounce per ton silver, which equates to about $250 in credits outside of what we generate from our silver, our tungsten, I beg your pardon, thereby hedging us quite tremendously against any decline in the price of tungsten as the years go by.
You announced last year a $750,000 investment into Viking Mining. That did close. I just was wondering about the strategy there and M&A, Alec.
Yeah, so we looked at Viking, and we looked at a past producing group of assets that Viking held. We recognize the fact that we've come to the understanding that you have to be modular, agile, and quick to market. What we saw with Viking ultimately told us that there's a path here for us to roll in additional assets. So not so much feedstock, because Nevada is a bit of a ways away, and it would cost a fair bit of money for you to bring on the feedstock to Patterson, Idaho. But what we recognize with Viking is, there's a small company that has acquired a number of really good assets that has a potential for us to have optionality to acquire those assets and replicate the low capex model to bring significant tungsten production online. We made that investment back in December, 750,000 Aussie, as you stated. That has gone as far as being 4x higher than our investment. I will say that we have done very well on our investment and to no loss of our shareholders. But what we've done there is opened up the optionality to acquire or partner with Viking to bring some of those assets online with a very small production profile, however, very impactful. For instance, Michael, with Tung, should we come to production at 500 tons per day, which is the intent in 2027, we will be producing 8% of U.S. tungsten demand, 10% of U.S. moly demand, and roughly 300,000 ounces of silver per annum. So I am very keen to see projects come online that don't have a $500 million capex, because that's $500 million ways to fail. I see the path to us onshoring leverage and the criticality of critical metals coming through to North America via organizations that are agile, modular, and have the ability to bring production online rapidly.
Lastly, Ali, what is tungsten work in this environment right now? The metal is up 500%, I believe, since early 2025. China controls about 80% of global supply. It is a critical mineral. What is the case for tungsten?
So tungsten is the hardest element on the periodic table outside of diamond. Diamond's the only thing harder. You've also got a melting point of about 3,400 degrees Celsius. And when you look at everything that we touch and feel on a daily basis, including our gold miners, who are, of course, having their time in the sun, you cannot drill, you cannot build infrastructure, you cannot really put holes in the ground that ultimately allow you to build these massive skyscrapers or data centers or nuclear power plants or wind farms that we see around the world without tungsten. So tungsten is a metal that has no immediate substitutes. You can use molybdenum, but you will have to change your drill bit 6 to 10 times faster than you would do with tungsten. So tungsten continues to rise. China has now put in place a export restriction, so nobody can buy tungsten outside of, or nobody can buy tungsten in China if they exist outside of China. And the statement that I made earlier with respect to we have outsourced and offshored critical metals, that's not reality. What we have done is outsourced and offshored leverage. Tungsten is a critical metal used in defense, used in infrastructure, and the double-digit GDP growth that we're seeing across developing nations is ultimately driving the price of tungsten to where we see it today. So it's irreplaceable, and we are tasked with a very important mandate to bring production online in nations that are deemed friendly.
Ali Haji, thanks for speaking with Mining Stock Daily.
My pleasure.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.